Please go through this risk disclaimer. Welcome to this part 5 of the basic building block series of videos. So I hope you have watched and liked and learned from the first 4 parts of this series. So now in this series, we are going to combine all the concepts that we have learned in the past 4 videos, and we are going to apply them on our live price charts. So here before you is the live chart of Bajaj Auto. It's the 5-minute time frame. So let me start marking zones. So starting from the left of my screen, from the bottom, I'll start. So here I can see a drop, base rally. So let me mark from wick to wick. So here is a drop, 2 basing candles and a rally and a good follow through. Right, so I mark with the first style, that is from the upper portion of the basing to the lower portion of the basing, candle wicks. The second style in which you can mark is that from the highest body of the basing candles to the lowest low of the basing area, right? And the third way was this one, the lowest body. This is the most conservative way of marking. The zone size is considerably small and the chances of missing the trades are also high. But then if you are playing a risk-based, a risk-based target, like a 2RR or a 3RR, then of course the targets would be really sooner compared to other styles of marking. So let me revert back to the first style of marking, that is from wick to wick, which I normally prefer. So here you can see that how prices today came back to this zone exactly till here and how nicely it rallied. Next, I'll mark one more demand zone, which is this one. It's a drop, a 2 candle basing, and then a rally. If you see over here, this particular candle, I'd consider this as a basing candle as well. See, it does not have any wicks as such, but look at the size of the length of the candle compared to the basing candles. So, like as I mentioned, smaller candles compared to its neighbors can also be considered as basing candles, right? So this is a right case where this small candle without any wicks is considered to be a basing candle. So we have 3 basing candles over here and then a good nice rally and then a follow-up candle over there. Price dropped back and it went up. It reverted from there. For the second time as well, when price entered the same zone, this was the first time back, the FTB. This is the second time back, the 2TB. Price again rallied, and then finally, in the third time back, price broke this zone. Then we see that there are other zones as well over here. So I'm not marking all the zones over here, but I'm marking the most clearest ones. Another zone which we would see over here is this rally, base, again another rally. So this is how we would mark this rally, base, rally. You can see that this zone failed. Price went completely through this demand zone. So again, we're not talking about whether a zone should be traded or not, but I'm just trying to show you how we mark zones, right? How to identify zones and mark them. So again, we can see that the zone that broke this demand zone was also supply zone, a rally, 1, 2, 3, 4, 5, 6 basing candles and a drop. So marking from wick to wick, this is how we would mark the supply zone. Let me color it with reddish hue to denote the supply zone. Again, prices went in there, it did come down a bit, right? And then finally it went up and broke the supply zone. Then finally we had this supply zone. If I delete all this, you can see that prices went up till here. It dropped from there, little bit went again it dropped. It based for 2 candles and again dropped, right? So you had 2 levels on top of levels. One is this level over here, and then second is this level stacked one on top of each other. So these type of zones which are very adjacent to each other, almost touching each other, two of them, right? These are called stacked zones. Now, there are two set of, in this case, sell orders, one over here and one over here, right? The more number of sell orders were obviously from the upper part, because the first part did give some reaction to it, but then there were more orders on the upper portion of the supply zone of the two. Then price went in there and then it dropped from there. So this is supply zone over here, and while it was dropping as well, you could see that there was one more supply zone over here, right? Price dropped from there, went in there, struggled a bit, dropped from there a bit, and then it went through. Right, so let's look at more demand and supply zones. So here again we have another drop, so many base, and then a rally. So if we again mark this zone, again not commenting on its tradability, I'm just telling you that this is a valid zone, and so therefore, sorry, this is a demand zone, so I'll mark it with green color. Then again, price went back in here, right? It fought with this supply, and price was literally stalled at it as it went above and faced supply orders. And then finally, price was able to push through. Over here, we can see another rally base, rally. Price paused a bit, and then again another rally base rally, right? And then price shot up from here, took out the supply over here, and these are the two zones. Please do not go ahead and buy in these two zones. I'm not commenting upon the tradability. I'm just marking the supply zones and applying the lessons that we have learned in the past few videos. Okay, so this is an example in Bajaj Auto. Okay, let's look at another chart. Let's look at Nifty. Let me just delete everything. Let's see what all zones we had today in today's price action. So this day, today was 7th of November. So we had this date. So we had this drop based rally. This was a demand zone, right? Not commenting on its tradability, just marking the zone. So as per our quality analysis, let me just mark this like this. Right, so as per our zone quality analysis, in terms of its structure, not on its tradability, this does have, very strong move out from the zones, right? So, and yes, and this zone as well. This was from yesterday. A rally, a base, and rally. It's also a good structure in terms of the move out from the zone, right? This zone has a good structure again in terms of the strength of the drop. This is a supply zone. Right, and second, again, there was a very level close above it. Again, a stacked zone, right? Rally, base, drop, again, base, drop. So there were two levels stacked on top of each other. So you can see what happened. Often, this when you see such stacked zones, price can often react from the zone that is away from the current market price. So here, price was moving up towards the zone. So this was a nearer one, and this was the one that was away. So price gapped up directly into the upper zone, and price stopped from there. Right? This is Nifty. Let's take a look at Bank Nifty. So again, very similar to Nifty, Bank Nifty also has this demand zone from today. Right, and there was the supply zone formed in the morning. This rally, right, two candle base and drop, and a follow through. You can see that the supply had held prices down. From there, price went into the supply formed in the morning in the first hour, and then price was held down in the last hour in that supply. There was this demand zone as well in terms of structure, still fresh, similar to Nifty. Another one here, tiny one, and this one is a small one, so you can combine both together, right, over here. So right now these are the ones which have strong move out from their basing areas. So in terms of that, the imbalance in those zones was very much palpable. Yeah, this was another supply zone. Which gave a nice reaction from there. There's a lot of advanced price action that went on in this entire picture in the chart, because of which this was really a tradable high quality supply, which once you get experience or once you go through more lessons, more upcoming lessons, you will able to understand why. Not just because of the structure, it was of a good structure because the move out was extremely good. It was just that the location of this particular zone and what price did previous to this zone and after this zone is what qualified this as a highly tradable uh, good supply zone, right? And another hint I would give you is that if you have gone to the lesson of compression, look at the arrival to this zone, right? It was all compressed. Look at this entire price structure over here. It's all compressed. So I think it's time that you can go and watch the compression video as well. It's really important price action, and as an arrival to a good quality zone, compressions are really important. So this was all compressed and all the path was cleared by the institutions, and they took price there, right, once, twice, and then the drop came from there. So again, this one, like if you see that this was a good zone in terms of structure, a good demand zone, but it failed miserably, right? So, like I mentioned, look at the difference between these two zones, like in terms of their arrivals. Price arrived to this zone with so much of compression and clearing up of the path, But let's look at the way price arrived in this zone, right? It was like a strong imbalance. Soof, it came here, and then it certainly broke the zone. And again, this was also a stacked zone. There was a support one from the lower zone below. Prices did react from there. And these kind of price structures are also very attractive structures to break the zones. I know I'm going a bit advanced. So whenever you see stacked zones very close to each other, right? So what happens is that the first zone will absorb most of this fall and the hit over here, right? And the momentum becomes really sluggish once price reaches the lower demand zone, the lower stack zone, and that really, gives the impetus on the reverse side. So again, just give you a small piece of advanced info over here, and I'll be creating a proper lesson for this, proper lesson video for how to trade stack zones and how to read price. Just give you a small hint here. But just notice how there is a price arrival difference between this zone and this zone. And also how this zone was helped by this zone in terms of absorbing the supply pressure, the sell order pressure. So if you're new to it, again, don't pay too much heed to this. Once you have sort of practiced this kind of price action for a long time, or at least for some months, then come back to this lesson and again, watch what I said a few minutes back. So hopefully we have applied, most of what we have learned so far. Right. Again, this was also an important supply. Right. Price went in there, faked out a bit, came back here and broke this. And this one broke this. I'm sorry, this was a supply. This is green. And look at the one that broke it, right? And how price reacted from that one. Again, another topic for another lesson. So these are basically called points of imbalance, and I'll be covering points of imbalance in a new video. So let's see. And hopefully you enjoyed in this video, and please subscribe to this channel. I'm hoping to reach 1,000 subscribers very soon so that the community tab gets enabled where I'm able to post charts as they happen, especially for intraday time frames, because normally I make videos after market hours, and by the time the live charts are already done and over, so the community tab enablement would really help all the learners to spot live opportunities or spot live learnings. So hopefully we'll get there soon, and if you can help me out by sharing the video amongst your friends who might be interested, it would really help the cause. Thank you so much, and until next time, I'll be coming up with a new video. Have a good day ahead. Thank you. Bye-bye.